Hey guys, welcome back to another episode, and today we're going to be talking about inflation because if you guys haven't noticed, prices of goods and services have been going up like crazy. One of the things that I featured on this channel was the price of lumber, and we can see that the price of lumber 5x in the previous year, which is insane. And there's other things out there that are going up in price. We can see that stocks went up in price like crazy as well. Housing prices are going up. And sooner or later, I think we may see car prices go up as well. We're already seeing this over south of the border. So let's talk everything inflation today to get you up to speed on what's going on and how to prepare for the future. As always, in the Monday episodes, I'm going to be going over my TFSA portfolio where I'm depositing $200 every single week and turning a 2K account into a 50K account, hopefully 3 years down the road. So at the end of this video, I'll be going over that portfolio. So starting off with, what is inflation? Well, inflation at the heart of it is an object or something that grows in size. So if you're inflating a balloon by putting air into it and blowing into it, then you're inflating that balloon. But based on what we're talking about and just the economy and economics, inflation usually refers to the increase of prices of goods and services. So essentially, it's the price that you're paying for these goods and services that are ballooning or increasing in size. Now there's a bit more detail that we have to discuss because inflation isn't just prices increasing. The question that should be going through your head right now is, why are prices increasing? And this comes back to the law of supply and demand. For those of you who are unfamiliar with supply and demand, starting with supply, it's basically the amount of goods or services that are available to be purchased. And then on the demand side, it's how many people desire to have this good or service. And the third component to all this is the price that people are willing to pay for it. So essentially the supply has to meet the demand somewhere in the middle, which is basically where the price equilibrium is, where there's enough people willing to buy it at a certain price and enough people willing to sell it at a certain price. Now, at the end of the day, dollars don't really mean too much to us, but I think what really means more, and this is something that you can adopt as well, is time. So we as human beings who are in the working class, if we're working, we're earning a wage, which is basically you're paid a dollar amount per hour. And that's how much your time is valued at based on your salary. Some people earn higher salaries because their time is valued a little bit more, and that may be just because they're creating a lot more value with their time. And those who are earning less wages, they're creating a little less value. And ultimately, I think wages also come down to supply and demand. When there is not much supply for a certain skill and the demand is high, then the wages are higher. But if there's a lot of supply for a certain type of job, but not much demand for it, then the wages for those types of jobs tend to be lower. Now that we've talked about supply and demand, let's jump back over to inflation and see why prices are actually going up for goods and services. So the way that I'm going to illustrate this to you is the example of an apple. So an apple 20 years ago cost less than an apple today. And there are various reasons as to why, but let's just do some speculation here. So there's two things involved in a transaction for an apple. There's the apple itself as well as money, because no one trades chickens or cows for apples anymore. That was more a primitive thing back in the day. And when we're looking at apples and money, each of these has a supply as well as demand. So for the apple, every year there's a certain amount of supply for apples as well as a certain amount of demand for apples from consumers. And for money, there's supply of money as well as demand for that currency. So when we look at apples, what affects supply is basically how well farmers can grow the crop that year, and are there any sort of natural disasters that are affecting the supply of apples. And the demand for apples, it's how many consumers are looking to buy apples that year. Maybe there's certain things people want to bake that one year or another there's a change in the demand for apples. And when we look at money, there's a supply for money, basically how many dollars are out there in physical money or in bank accounts. And when we look at demand for money, it's how many people actually want some currency and to obtain that currency. They're not going to buy currency, but they're going to earn currency from their jobs and hoard it in a bank account. Now there's 4 ways that the price of apples can actually increase. First is the supply of apples is interrupted and there's a decrease in supply. And this could be due to natural disasters that cause in a whole apple crop from a certain area in the world to decrease or actually just go to zero, and that will decrease the supply of apples that are out there. The second way is that the demand for apples increases. So potentially maybe in 2020 where everyone was stuck at home, During Thanksgiving, everyone wanted to bake apple pies and the demand for apples increased. So this would increase the price of apples. Now the third way is that the money supply increases. So if there's more money, the demand for apples stays the same and the supply for apples stays the same, but money has increased. Now there's more money to go around and it's actually valued at less, so therefore the price of apples will increase to match the increase of the amount of money. And the fourth way that the price of apples can increase is if demand for dollars goes down. If the demand for dollars decrease, this means the dollar is losing value, and the apple retains the same amount of value because the supply and demand are the same. Therefore, the apple price will increase in dollar amounts because the dollar has been devalued. When we're talking about the prices of goods and services inflating, we can see that on the goods and services side, the supply could be decreasing or the demand could be increasing in order to affect the prices and cause them to go up. As well as on the money side, if the supply of money increases or the demand for dollars decreases, this will also affect the price of goods and services and cause them to go up. But right now, because inflation is being mentioned quite a bit and people are worried about it, the real reason for inflation right now, I believe, is the increase in money supply. We can see with the whole pandemic that just happened or is still happening, the government had to print a lot of money to support people who ended up with no jobs or got laid off. And the big question everyone always had is, how is the government getting this money? The way that the government in Canada raises money is by issuing bonds. And bonds are essentially like a loan with some interest rate attached to it. For anyone who buys a bond, they're entitled to their initial capital that they put in, as well as some interest at a certain maturity date. And one of the major purchasers of these bonds are the central bank. And the Central Bank of Canada can actually print money out of thin air. And how does the central bank make money? Well, there's two ways. They can either print real currency like cash or coins, or they can just enter it onto their bank account with a few clicks of the key and an enter. The second method is the preferred method, and that's how they bought these Canadian government bonds. Now you might say, hold up, that's not really fair. How can the Central Bank of Canada just print money like that? Well, I guess there's a few different things that go into this. The central bank's purpose is to try to keep inflation at 1% to 2%, as well as they can step in if the economy is going into shambles. So with COVID-19 and people out of jobs, the Central Bank of Canada need to somehow stimulate the Canadian economy, and by printing money, that's how they decide to stimulate the economy. When they print more money and get it out into the hands of people through the Canadian government, this will theoretically encourage more spending from the citizens. And in turn, hopefully that would get us out of this mini recession. Note that the Central Bank of Canada didn't actually give the Government of Canada money. They purchased bonds which will eventually be repaid back to the Central Bank of Canada. And when they receive that repayment for the purchase of their bonds, then that will effectively be decreasing the money supply, because when money comes into the central bank, they effectively destroy it. It's not like the Central Bank of Canada is paying out dividends to shareholders, or any sort of person is entitled to that dollar amount on the central bank's bank account. But you can't just print money without any sort of repercussions. And this is why inflation happens. When the money supply increases, then every person's dollars decrease, and therefore prices will go up in general. So when the central bank decide to print all this money, they've effectively decreased your purchasing power because prices have gone up for those same goods and services in the past few months. And ultimately, people realize this and decide to buy assets that would be a hedge against inflation. These are things like houses, stocks, as well as collectible items like Pokemon cards. Now next week, I plan to talk about how the Government of Canada is going to pay back this massive debt when the government has continued to run a deficit for the past 10 to 20 years. And with the pandemic happening, this deficit is looming over Gen Z as well as millennials, because we'll be the ones who eventually have to pay taxes to erase this deficit. For now, let's jump over to my computer and talk about my TFSA portfolio and what happened in the past week. So this is week 13 of this TFSA portfolio, and we can see here that I'm still down 1.13%. If you guys remember last week, I was down around 2 point something percent. So we can see my portfolio in this past week has had a total change of 0.35% to the upside. We can see the total market value is $4,593 versus the total book value of $4,646. And when we jump over to the total portfolio, we can see that right now the position that's down the most is the Bitcoin ETF. But right now there's a lot of fear in the whole cryptocurrency market, which is ultimately keeping Bitcoin prices down. But Bitcoin is a volatile asset and it easily could drop 20% or it could go up by 20% as well. So this stock, when I bought it, or this ETF, I understood there was high volatility and I was prepared to see 20, 30, even 40% drops here and there. But I still have a thesis that it will go up by the end of this year and I'll be in the positive when that time comes. But for now, I'm down 19%, but over the past week, I'm up 5.3%. Now, before I talk about the rest of this portfolio, let me jump over to my Wealthsimple trade portfolio and give you an idea of what the graph looks like. So you can see over the past 3 months, I've made steady deposits and the portfolio has continued to gain. And we can see sometimes the portfolio's value is starting to meet the deposit value, meaning that the portfolio wasn't up by much. But then recently in the past week or so, it's been starting to spread out such that there is a big difference between, or a bigger difference between portfolio value and net deposits. Hopefully over time, this difference will continue to increase so that the portfolio value will take off exponentially compared to the net deposits. But again, 13 weeks is not a very long time, and I'm in this for about 3 years. Now jumping back over here, we can see that other stocks that are down in this portfolio are Enchos, Stella Jones, Good Nature Products, and Kinaxis. If we go over to my transactions this week, I actually bought a share of Kinaxis here on June 8th. And then I bought a share of Stella Jones, as I mentioned last week. And that's, again, because these stocks are down in my portfolio. And over the long run, I'm pretty sure, or I have an inkling of a feeling that they should be up in 3 years or so. And lastly, I bought some Algonquin Power Corp at $18.95. So now for the next week, how I'm going to decide as to what I'm going to buy is look at the total market value right now and sort it from the least to the greatest. And I want to start to increase these positions that are a little bit small in the portfolio and give them a heavier weighting. However, the one thing that I'm not really sure if I want to increase is GDMP because this is more of a penny stock and relatively a bit more speculative. So for me, for this portfolio, I'm trying to keep my speculative plays at bay and not let them overrun the portfolio for the most part. Another interesting thing here I noticed is that the dividend yields are back. So it looks like Yahoo Finance has, somehow flipped a switch to allow Google Finance to tap into the database. So again, if you guys are looking at your spreadsheets and you saw the dividend yield was gone, but now it's actually back. So when assessing this portfolio right now, I think I'm going to be adding some Sun Life this week. That's because Sun Life has actually come back down. I think a couple weeks ago, it was sitting around $66 per share, and I'm only up around 0.49% in total. So I'll probably add 1 share of Sun Life this week. I'm thinking TD I'll add to this week as well. And beyond that, there's probably this other stock that I'm looking to add, which I'll make a deeper dive video onto it, and that's DCM, or Data Communications Management. So when you look at it right here, the stock is trading at $1 and you may think it's a penny stock. However, first of all, it trades on the Toronto Stock Exchange, so it's not like it's on the Canadian Securities Exchange, which are where more sketchier stocks are traded, or the TSX Venture for that matter. It's actually on the big boy exchange, the Toronto Stock Exchange. It does have a very small market cap at $50 million, but I've been doing my research on this company and I'm fairly confident that this stock is really undervalued right now. They have a P ratio of 4.47, and I think the CEO who came into management recently is doing a great job so far. If we look at the 1-year performance of the stock, it was trading around 18 cents back last year in 2020, and it's had a whopping 505% gain. However, looking at the 5-year chart, the story is not as rosy. The stock has actually dropped around 42.63%. Now, if we look over the lifetime of this company, we can see that the company is trading at $1,000 in 2004. However, there were probably some reverse splits, and that's why the stock was trading at $1,000 back then. I don't think they were actually trading at $1,000 per share, but there was probably like 10-for-1 stock splits throughout the entire history of this company, and maybe multiple of those. So this is a stock that I may be looking to add this week. And if we're looking at it from the beginning when the stock IPO'd, it's down 99.89%. But right now, the company's in turnaround mode. They're getting rid of all their debt, as well as they have positive cash flows. And this company is trading at $47.89 million. I think they bring in around $250 million if I recall correctly in revenue, and they have profits around $9 million. But I'll actually throw up the real numbers on the screen so you guys can check out for yourself. So that's a stock that I'm looking to add to this portfolio, and I think it could be a very nice booster to the overall percentage gain in the next 3 years or so. If you guys are looking for safer plays and want a stock that pays out a good dividend right now, I think Power Corp of Canada is something that you should look at. In previous videos, I mentioned their net asset value is around $45 to $46 per share, but the current price is only $40 per share. In Power Corp of Canada, they actually own a large portion of Wealthsimple Trade. They own around 43% or so, if I recall correctly, but it's just under half of Wealthsimple Trade. And this is a very decent investment for them. Wealthsimple Trade is worth around $5 billion, but I'm pretty sure Wealthsimple Trade is going to be the dominating trade platform going forwards in the future, because right now they're targeting millennials and Gen Z people with just the aesthetic of their product and just the ease of use. This is why millennials and Gen Zs are attracted to Wealthsimple Trade. And as these people grow up, get better jobs, get raises, get bonuses and stuff like that, then their accounts are going to increase in value. And ultimately, Wealthsimple Trade's business will increase with these millennials and Gen Z. So if Power Corporation of Canada doesn't get rid of the Wealthsimple stake, they continue to hold a large portion and don't sell out of it, then I have no doubt in my mind going forwards in the future, this company will be quite valuable as an asset. If you guys enjoyed this video or found it informative, please leave a like down below. And if you guys wouldn't mind, hit subscribe and hit that notification bell, as I'll be having a couple videos come out this week. I plan to talk about this $1 stock that I'm holding right now, and I think it's undervalued. Also, I'll be releasing another video on kits.com. And finally, I plan to do a video on my Wealthsimple Trade portfolio, which talks about my growth stocks, not my TFSA portfolio. So if you're interested in that, be sure to hit that subscribe button down below. I'll be throwing up 2 videos on the screen. If you're interested, you can check them out. If you're there, I'll see you there. If not, keep up the grind and have a great day.